Welcome back to the Investor Professor podcast. This is Dr. Ryan Peckham, and this is episode 178. On today's episode, Cameron and I break down the stock market. We look here mid-December. How's the market doing? Looks a little sluggish, if you will. We're having a good year. We'll talk about the indexes, but it just doesn't feel that way. So we'll talk about investor sentiment. We'll talk about AI. Is it a bubble? Is it not a bubble? We'll talk about the Fed rate cut. We talk about jobs. We just talk about a lot of things going on. We talk about Cameron, where he's at, what he's excited about for the new year, and what he's proud of for the year that has already passed. So, as always, get your mind right, and let's get to work. Well, welcome back to the show, everybody. Cameron, happy end of the year.
Happy end of the year.
Hey, don't you worry. Don't you worry. I made the camera angle a little higher so we don't get so much leg.
We're gonna call that out.
We had some people send some messages.
This is
They're
a
like,
rough
hey,
start.
They said that's a little too much. That's a lot of leg.
Hey, no more shorts, I guess.
Just kidding with you. Hey, shout out to we got a lot more listeners this year. I'll do a recap, I guess, later. I don't know, they send out like the Spotify thing or whatever, but I did have some people. Shout out Reagan. Who came up to me and said, "Hey, you're the number one podcast that I listen to." So,
ooh, okay.
A lot of new listeners, like a lot of I just barely went through it, but like the whole 26 countries. I don't know.
That's the crazy part. 26 countries.
Yeah, 26.
That's insane.
26 different countries.
Because you would think, I would think your students, right, past students, all Texas based, maybe they moved a little bit, but countries is insane.
I mean, I tell them, like, if you go to another country, download. You don't even have to listen, just download it.
That's it? You're paying everybody off?
Yeah, just listen for a minute. I don't know. I actually don't know, but I'm sure there's some kind of, you'd probably know better than me. Like, there's got to be, they have to listen for so long for it to count, but I'm not really sure what that number is.
Zero clue.
But here we are. I'm excited. Like, next year should be able to be a little bit, I had such a busy fall. Fall is such a busy time. Every time we crank this thing up, I'm going, geez, I can't believe how many weeks have gone by.
Yeah, the year I think has gone by quick. This year, just all the news, you just get it's like everything's always something new in the headlines. Things are moving quick.
Yeah, so much of that. I mean, you look at the market right now. We have Dow's up 12.8% for the year. We have the S&P up 14.5%, and we have the Nasdaq up 18.29%. But it doesn't feel like that to me.
Especially today.
Yeah, especially today. But also, like, I know that 2 weeks ago, the NASDAQ was up 22%. So we've already slid, like, in the last 10 days, we've already slid 4%. It just seems like there's a lot of anxiety and trepidation within the market right now. I don't know. The sentiment seems a little very, very cautious, I would say.
What do you think is pushing that right now?
I think that a lot of it is the AI trade and how many, the fear that it's a bubble and all of it. I mean, that has gotten so much traction. I feel that a lot of that is being, given, a lot of credence just based on some of the interviews I've seen with some of the CEOs of some of the big companies. I don't think that they have, answered questions well, quite honestly.
Yeah, there's been a few things. I think the one thing that I would say started it in my mind, and I'm not saying that, like, we'll get into bubble talks and all that stuff, but like, some pullback is good.
Yes.
I don't think we're like in a dangerous part yet, but there has been a few times, like the whole Sam Altman interview where he was being interviewed by Brad Gerstner and was, hey, you're making all these promises, these deals, but you don't have the revenue to back it. And Sam Altman just said, hey, if the shares you own currently right now, I will find a buyer if you really want to get out, which everyone keeps saying that's going to be the main clip in the documentary that comes out on Netflix.
the movie that comes out. I would say that I think that there's one, attribute or emotion that most people on this planet do not like. And I think that attribute would be arrogance.
Oh, yeah.
And so when somebody comes across like Altman did during that interview, when you have that arrogance, it turns a lot of people off, and it also makes them stop and go, wait a minute.
Yeah.
Like, Man, that wasn't a hardcore question. That was like a legitimate question. Can we get a real answer, please?
And I think there's a fine line between arrogance and confidence, and I think this is why there's so much, like, there's companies that go into training CEOs on tone and how to talk, right?
Right, yeah.
So, that's arrogance, and then I'm sure some people are thinking, well, hold on, wait a second. Alex Karp's on this interview saying this.
Yeah.
And sometimes there's a fine line. And I'd put Alex Karp more on the confidence side than arrogant side.
Yeah.
But if you kind of strip away any tone and you just hear the words, I bet you it sounds pretty similar. But it's coming from a place of confidence, I think.
Well, also too, like, if we just go back to like the study on this, I mean, there is a lot of research out there that shows that like most of what somebody picks up isn't the words that you say.
That's how you say
it's the body language and your tone of voice.
Yeah.
And so, if that's off, or if it doesn't match the view that they get of you, or the body language is off, then it just, like, there's something innate in all of us, like our intuition's like, wait a minute, like spidey sense or however you want to describe it goes off, and it's like that doesn't sound right. And I think that those, so when you look at like the gains we've had in all these companies, and we're getting to the moment where I think we're actually a ways from this, because a lot of the first data centers aren't supposed to open until the second half of 2026. So we're not very far from like the first one that's supposed to open, which is the one in Abilene, Texas, which is Stargate, which is OpenAI's, like, that's going to be like the first one that really opens. And so we'll see, but that's that's mid-year 2026, second half of 2026. So we'll see how that goes. But when you look at it, it's like, it seems like the market's taking a pause. The market is being, I truthfully like this better than just melting up and everything just being, blazing up. I mean, I definitely think that this is kind of a better spot to be in, where you kind of take a pause and you kind of damp down the euphoria with a lot of the speculative names that are out there.
I'd be worried if we didn't. I'd be worried if it was straight up to the right.
Sure.
That's where I think you start. Again, the whole bubble scenario, I don't think you can make a assumption on whether a bubble is present or not by just a single point in time. I think it's a period of time you got to see. But if I saw a period of time where it was just completely up and to the right and things were just getting out of hand, like completely out of hand, then that's more bubble territory. But I think good pullback. I think pullback is
healthy.
good.
It's
good in the market. And I also see too, like, I forget the exact stat, but it was going along the lines of like Gen Z and kind of like my generation is always the tagline is, we can't afford a home, we can't do this, whatever. Yeah. And if you look at the facts, a lot of us are heavily invested in the market, the public market. And the article was drawing question, well, you're so invested in your 401k, which is good, but previously everyone just put their money in a home and maybe prioritized retirement a little later, or their home was the retirement.
Right.
My generation is doing the exact opposite, right? And I think they're putting a lot of that money that's driving up some of this buying back in, because you see when it comes down, bounces kind of back, not quickly, but over time.
Well, and you have to think too, like, that's the one thing is, like, yes, your generation has had trouble getting a home and all that, but your generation is also, quite frankly, invested so much earlier than earlier generations.
Yeah.
So earlier generations would start investing at 30 to 35, and y'all are 20. You know, I mean, like, and so that is definitely something that has changed. And every generation has their own things. I mean, every generation has their own challenges. They have their own things that they have an advantage on, maybe something they have a disadvantage on. But at the end of the day, I mean, I think that stuff, I mean, that'll kind of work itself out, I think.
Yeah. I know we talked about the confidence index previously. Yeah. I'm wondering what this is going to look like for Christmas with spending, right? Like, we're seeing some numbers come out around like savings at a low, credit card debt at a high, repossession rate, which is another thing that he will track to see what the economy's at. That's tricking up pretty good.
Yeah.
But then also it's like, wait a second. That doesn't make a whole lot of sense, because now we're seeing Black Friday was...
Yeah, it was good.
It was good.
I mean, people are still spending money. I mean, you have to realize when you look at GDP, right? Like how we measure economic growth in the, gross domestic product in the United States, 70% of our GDP is consumption.
Yeah.
70%.
That is a lot.
Yeah, it's we're number one in the world, Cameron.
Those Birkin bags.
Yeah. I mean, it's just everything. So like consumption has to stay up. I will say that there's some softness in the labor market. There's definitely, we finally got a jobs report, right? So 105,000 people lost their jobs in October. Most of those are federal employees.
Yeah.
So November was a little bit better. But because of those, the weakness in the job market, you saw the Federal Reserve like cut interest rates one more time.
Yeah. The softness in the job market. It's funny. For a while, right? There was an intern, and he's currently going through the job market and applying. And
hey, Brant.
Yeah, shout out. And it's weird because like when I graduated, it was prime COVID. Like it was early COVID.
Right.
And, like job offers were getting rescinded. I had job offers get rescinded. Like it was and it was a terrible market to get employed in because no one knew exactly what was going to happen. Some companies thought that they were going to have shut down. And then now there's this, which is like same flavor, but different, I guess. Same, but different, where it's a lot of companies are pulling back on hiring, and you can go look at career pages at all the major tech companies, all the the companies that usually hire the new grads in the universities. Look at their career pages. Are they senior roles or are they entry level? Much less entry level.
Right.
And they're slowing that up because I think they're trying to see, wait a second, we see this use case because every AI consulting company right now, which is a hot economy on fire. All these consultancies are starting up. They're going to these companies and saying that you can, replace a lot of that work. Now, I'm not going to call it grunt work, but the work that often you would do
entry level,
because you got to get your reps in.
Yeah.
Replace it with AI, which is putting these new college grads at kind of a disadvantage, unfortunately.
Of course.
Very tough. I don't want to end on a bad note because I'm going to add a good note to it, but with that, I think if you were going into this job economy, don't hear that and think, oh, this is going to suck. I think there's application there for you to learn about some of it and see and how you can use it as like a candidate that's more well versed in AI. So you're not totally out of luck. But I think that's having an impact.
I definitely think there's this wait and see type of moment here where it's like, how we had this conversation kind of off air, but I'm like, okay, we're talking about data centers. We're talking about this. I'm like, okay, that first data center kicks on. How's my life change?
Yeah.
Like because I know that there's going to be a time there for the market where you look at, there's an article by Howard Marks. I'm going to put it in the show notes, but there's an article by Howard Marks, which we talked about before, that's called, Is It a Bubble? And he does a great job. Like I love reading him because he's always like both sides of the coin.
Yeah.
Like he's just so well balanced. But he talks about like, obviously there's some bubbles that are bad. And then he makes the argument that there's some bubbles that are good. And it reminds me of, Charlie Munger saying to always invert, like look at the other side of this thing. But I do think that there's like, we're kind of in this wait and see, like, okay, you told me this is going to change my life. You told me, and everybody is impatient.
Yeah. So
it's like my ads might be getting a little better on Instagram, but like how else is my life going to change? You know what I mean?
Yeah.
Like how else is this going to, it's so much of a, what have you done for me lately?
Yeah.
And it's like, I don't know. So we'll see how, but the market at some point is going to want to see what's the return on our money. And, in that article, this is where I was going. In that article by Howard Marks, he said that the estimation is that they're going to have to spend $5 trillion on the AI build out. And if you look at the top companies, they got about $350 billion on their balance sheet, which is crazy. And obviously, like, they're going to make money over time. And that's, but it is a massive number. And so at some point, investors are going to be like, what are we getting? Where's the return?
Yeah.
And then that's what you don't know is like, when is that expectation going to be like, we want to see results now?
I also think too that as the expectations are going up, as more dollars are going pushed in, which is the hard part, right? Because it's not just flat of like there's money being invested in this way. I want to see a return. It's no, okay, I'm investing more money. So my return better be much higher. It better be much higher in terms of the value that this tool brings. But to your point about the data centers, right? It's going to be more the effect of it's going to be speed. Right? Like when you're in queue for ChatGPT and things are thinking, it's going to be much quicker. And then there's more complex tasks. Like, if we call a spade, right? Like when we use AI, we're not using it to its capability. We're not creating code, right?
Right.
We're not doing these complex activities.
Which is what a lot of people, or a lot of the big companies are doing.
That's the number one like use case right now with AI. I've seen it firsthand. Creating code using AI tools, like that is a use case that's set in stone. And the reason why I think there's so much I'm not going to say hope because there's just there's crazy expectations for AI is because of how expensive that used to be. Yeah. That was the most, you come out of college, software engineers, software developers, that's $350,000, $400,000. That's 22 years old. That's the job offers you get.
Yeah.
Right. So it's super expensive for companies to build out that. And now they're able to take that cost and push it over into these AI tools, which is why we're seeing like,
it's wild.
I saw, their stats, and this is an average. So across the board, average IT budget, S&P 500, 35% of it is going towards AI products.
Yeah.
Which 35% doesn't sound like a lot, but we're talking about like big companies. Well,
and we always
talk, a lot of dollars.
I mean, we talk about like, there's somebody making money somewhere, and over the past couple of years, it's been the AI company. I mean, that's where the growth in the market has been.
Yeah.
When you look at, you and I've talked. I mean, I've been looking at some of these boring companies. I've started taking gains in some of these that have been such good winners because I think the market's going to be. I'm not saying it's going to be harsh next year, but I'm just saying the bar is going to be. I think that they're going to judge them more harshly. For whatever that means, but I think that there is some opportunities in some boring names that have been beat up this year. Like you have Procter and Gamble down 16%. You got United Healthcare got cut in half because of all their problems. I'm looking like oil's at a 4.5-year low.
Yesterday was
Nobody's looking at any oil and gas stocks, and you can make and I feel like from that standpoint, it's like when I was doing this in 2022. And I was loading up on Morgan Stanley and Goldman Sachs, and I was sitting there thinking 2 years out, because at some point there's going to be all these IPOs come back. There's going to be money coming into those areas, which is today. But I'm thinking about that for like when I'm building portfolios, and for people listening, I'm looking at like there's oil companies that nobody cares about anymore, but you can get paid a pretty good dividend to wait for oil to come back. And I'm not saying it's not going to go lower, but I mean that you kind of want to start positions, look at industries that nobody is paying attention to that are going to be cyclical and that at some point they're gonna come back.
Yeah. Did you see Medline IPO today?
Yeah, I haven't looked at it, but I saw the headline on that.
Yeah, $6.26 billion. It's one of the bigger ones in a very long time. I think 2021. I think it was Rivian actually. Was it Rivian 2021?
Yeah, Rivian's done well.
That was like the last highest IPO. So I think if this goes well, I think there's two things riding on this, and we didn't even plan this, but like, I don't know how we missed this, the whole Netflix Paramount deal.
Yeah.
Like that acquisition, this IPO, I think these are things that are testing the water. And I think right now the market's watching to see what's going to happen. If the IPO goes well, the acquisition goes through without a hiccup. Right. There's no, push for, wait a second, Netflix. Now you're going to have this much in viewership. That's going to be tough.
That one is going to be a fight.
So, but I think it's the litmus test right now.
I like Netflix, whether they get it or not. Netflix is at like $95 a share, and it was $134.
Yeah.
It also split. So I'm giving you the after split, but it split 10 for 1. So it was $1,000 a share a couple months ago. So the fact is now like somebody younger that can afford $95 a share is much easier than when they were like $1,020 a share.
Yeah, I mean, you said this before on previous podcasts, but don't bet against somebody's habits, right? So Netflix, what do people talk about? Like binging episodes, binging new TV shows. What do people? Oh, my sleep's messed up. Why is your sleep messed up? I don't know. Well, maybe it's the 6 episodes you watch staring at your screen 6 inches from your face.
They just need to pair that with like a dating app. So they can like
Netflix?
Yeah, so they can tell you like, hey, this other person has also watched 34 episodes of whatever show, and they're only 25 miles away from you.
It's not a bad idea, actually.
I don't know. I mean, I look at that like they've gone from 134 to 95. Obviously, this overhang if they do it, but I just like I look at that and go. I think it's probably a pretty good entry point for Netflix. But one of the things that's driving me crazy, I'm old man
back in the day.
Yeah, no, it's just that like there's been new stuff that's come out that like my daughters want to watch and stuff, and now instead of dropping the whole season, they're doing like this 2 episode at a time.
Oh, you don't like waiting?
No.
Wait a second. What did you do back when TV was black and white?
Yeah, that's good. Yeah,
it was like every Sunday. Yeah,
I'd have to get on the roof, and like I'd have to tweak the satellite.
Yeah.
My dad would be yelling at me. Yeah.
What was the? Is it TiVo? TiVo? Did you have TiVo?
I don't know if I ever had TiVo.
TiVo's the one where you record the episodes, right?
Yeah. I can go way back. I mean, there's VHS tapes, but yeah. But anyways, I just think, I don't know. There's a lot more commercial. Have you not noticed the more commercials?
Yes, and I have questions about that. I'm watching Google's earnings because of that. Because YouTube, I watch a lot of YouTube.
Yeah.
Podcasts, stuff like that, right? And much more commercials, longer commercials, and that tells me one of two things: either the price that they're getting paid for these commercials is coming down, so they need to keep that revenue up, so they're trying to get more time on viewership, or this is just a revenue line that's growing a ton for them, so they're going to keep trying to do. I want to watch.
Have they not broken you yet?
To buy YouTube Premium? Man, you know me.
I know.
I'm a little cheap.
I'm wondering what it'll take. How much is it?
I'd rather buy Google stock than buy YouTube Premium.
Really?
Oh yeah. YouTube.
How much is? I don't know how much it is.
YouTube Premium?
Like $50 a month or something, probably.
I don't even know.
I saw a deal where like this just came out, but I saw a deal where like the Oscars are going to go from ABC to YouTube in 2029. And I'm telling you, this is going to be the thing when the NFL or one of these sports when they leave regular TV and go to Prime or whatever, that's the end of cable. I mean that's literally the death knell.
12 months for $140.
There you go.
That's half a share. That's half a share of Google. I'd buy Google.
Tom's worth something. So I don't know. So, well, we had a big year. You had a big year. What are some of the things you're most happy you accomplished in 2025?
The marathon was huge. It's crazy because it feels like
a year ago.
It feels like
but it kind of was. It was April.
Yeah, so that was huge. Being in London, that was insane. I mean, growing up, I never thought I'd be in London. So that was awesome. Walking around London streets with a coffee, hanging out at different places, checking out London and just the culture over there.
Yeah.
That was awesome. And then the NBA. I invested 6 months in the GMAT and trying to get in, and then I got it. Now I'm in it. So those were my two big things, and I'm ecstatic about it.
Yeah. Any goals for 2026?
I'm working on them right now.
Okay.
I'm working on them right now.
Yeah, so we'll compare notes later. We'll compare notes later and kind of like I am doing that too. Like I'm kind of looking out to 2026. I think that for the market wise, I mean, what do you think for the market next year?
Hope it's smooth. I don't think it's going to be.
Yeah.
And I think there's just going to be so here's right off the bat, right? Fed chair, Powell's out. They're putting somebody new in. That's already rocking the markets. Yeah. Who's that going to be? Is it going to be Kevin or Kevin? Kevin Squared.
Right. But that's still not till May or June. I mean, it's a long time to get there.
You think the market's not going to move a ton going into that? I feel like the market will probably be moving much more going in than the day of.
Yeah, well, it depends on when it gets announced, but yes.
Yeah, so I think that's going to rock the market a little bit. Not saying for the best or for the worst, but I think it's going to move it around. I don't know. I think if everything goes as what people think is happening, the market's estimating that Trump is going to put in somebody that's going to cut rates pretty quickly.
Right.
You cut rates, what happens? Money's cheaper. These tech companies, these companies are able to invest dollars a little bit quicker. I think that's going to bring up the market a little bit.
Well, if you
for good reasons, I don't know.
Yeah, but you pair that with the big beautiful bill or whatever, and the oh gosh, what depreciation? What's the name I'm looking for?
The double depreciation thing.
Yeah, where you can take all the depreciation up front, accelerated depreciation.
Yeah.
So you pair that with all these big companies being able to write off all the expenses that they have should do pretty well. I mean, I know you could do it this year, but it wasn't on people. It wasn't budgeted. Like they didn't know if it was gonna pass, so they couldn't really
plan for
it. But next year they probably have put it into their budget. This is what we're going to spend money on. So you should get a pretty good uplift from that.
It's a very good point. That's like going back to like a lot of this CapEx, this expenditure, and just like building out AI stuff, right? Like,
yeah.
I wanted to bring this up. I have a friend that he runs the sales for one of these AI companies.
Right.
He runs sales for mid-market. So mid-market being like not Fortune 500 companies, not like big companies, like, and not really mom and pop, but like in the middle, right? Like
10 to million in revenue or something.
A little more than that.
Okay.
Yeah, but right around there, right? And usually, sales, tech, if you're selling software, those types of companies, you're probably going to see 6-figure deals. 400,000 or 500,000 is probably going to be where that caps out. That's usually why, like, when you get in your career, that's not like the end goal, because you can only make so much money on that big of a deal, right? You want the bigger deals, better commissions. So middle market, oftentimes 500,000, he's seeing like a couple million for mid-market companies for what they're spending on acquiring some AI technology.
Wow. Yeah.
Which is huge, because like those are big bets at these companies that, quite frankly, like that's going to take up a lot of their spend, right?
Yeah, right.
So
little room for error. Yeah.
To your point, that could be beneficial. Like that could help them in terms of depreciating some of the stuff that they're spending money on.
Yeah. I mean, that's why I've been looking at these companies like APH, which is Amphenol, that makes all the electrical connectors and all the little things, like going in to see like what are the things that you have to spend money on. I just think there's, every year brings different challenges. Every year brings, different opportunities.
Yeah.
But I always like to look at like where are some places people are looking, or some places that people aren't looking. And quite frankly, some of these companies that have moved down the last couple of weeks, some of the AI companies, the Broadcoms, those kind of companies. I mean, if they keep, hitting their numbers like they are, eventually they're going to come back.
And I think they're going to come back in a I don't want to say big way, but in a big way, because the one thing I'm noticing now is in any gold rush, there's going to be bad apples. That's just the way it is.
That's the way it is.
And some of the bad apples are starting to turn up in the last week or two, and they're continuously turning up. So what I mean by that, so there's a lot of companies that were hopping on this AI train. There was one that I mentioned to you off air that was Giga AI.
Yeah.
They got $100 million or just shy of it, maybe $80 million in VC funding.
Yeah.
They were an AI type company working with enterprises, saying that they were going to do all this, and that they had, this many Fortune 500 companies. A bunch of employees got laid off. And what did those employees go do? They basically spilled the beans on there was never any of these customers. It's totally fabricated.
Well,
so now there's a full on persecution of the company, and they're not the only one. These bad apples are starting to turn up more and more. And I think what that's going to do, not sour the market on AI, but the real winners, the ones that are doing it right, are going to come to the top.
Well, you have to at the end of the day, I mean, this is not our audience. What I'm about to say is what I'm about to say is our audience. The people who need to hear this are not listening, is basically what I'm trying to say. But at the end of the day, you have to be a disciplined investor. And, you remember the first thing I said in your class when we started talking about investments. I'm like, number one thing, you got to know how the company that you're investing in makes money.
Yeah.
And I've said it in front of every class, everybody, you have to know, how is the company I'm investing in? How do they make money? And there's so many companies out there that they don't have any kind of plan of how they're going to make money. They just stick AI somewhere in the name or the mission statement or whatever. But you got to go look at the balance sheet. You got to go look and see, does this company have real revenue? But I know I'm asking a lot.
Yeah.
But I mean, I know, and this goes, I'm going to partner this with NASDAQ, asking, turning in stuff with the SEC about doing 24-hour trading, which is literally going to just open up the casino side of the stock market. I mean, that really does. I mean, my gosh. I mean, that's just going to open people up for making, probably poor decisions.
Yeah. We talked about this. I get worried about my generation because the sports betting thing is absolutely rampant. I don't know, though. The NASDAQ, I'm curious. I think it can go one of two ways, because from my understanding, there's still going to be pre-market and post-market. And the pre-market and post-market, those market makers like Citadel Securities,
right?
They're not obligated to price both sides during the pre and post, but they're obligated to put the price during the day. So if there's nobody making a market for all those orders.
Well, that's the one thing that you're not going to see in the headline is people forget it's a stock market. So there has to be a buyer and there has to be a seller. And there's going to be that bid ask, which is, the spread. And we, so many traders, I guess I would say, take it for granted. They take liquidity for granted that I'm going to hit sell or I'm going to hit buy and it's actually going to happen. But if there's nobody on the other side of the trade, you just staring at a screen, hitting that refresh button and, hoping for the best.
I think what it is going to do is it's going to change the, how you're just placing your orders. If you're putting a stop loss on things, a stop loss, they getting triggered, they're not.
Oh yeah, at night.
I think that's going to move some things around. And I wonder too, there's going to be some good case studies on this of just the market sentiment, pre-hours, all that time. Because, you have some hours before the market opens, but like how many hours you're sitting and stirring in this news and you're moving the market around pre-market, is that going to mess with the open at all?
Yeah, but it's also too, like, so many don't think about how, the NASDAQ is trying to make money and there's no commissions being paid anymore. So we got to make it up on volume. What's the easiest way to make it up on volume?
Open the casino.
Open the casino. Let people trade at 1:30 in the morning when they're making great decisions. I mean, it's there is obviously I worry about the fact that like most investors, or I worry about younger generation because I teach them. I care about their financial future, but you got to be invested long enough to get past that initial cost basis. And if you're just constantly trading your account, you never get off the cost basis. I mean, you look at like just your account from where it was 2 years ago to now, and like you look at those and you're like, man, I'm not getting those share prices back. Hopefully I don't.
Yeah, I don't think I haven't sold anything in like 2 years.
Yeah.
I mean, my personal portfolio at least, but it's because like where I'm at, my age group, like I got some years invest. So take that as like a way to say like if you're a Gen Z, like just get a good, this sounds like you're ordering something, but get a good cost basis.
Yeah.
Everyone wants a good cost basis, but also like just hold for, when you're in your 20s, you have time on you can't buy that.
Right. Yeah.
And I think everybody, we're talking about mispricing things. Everyone's like, oh, misprice this stock. You're mispricing your time.
Yeah.
It's super valuable.
Yeah, I mean, I think the thing is just get a good portfolio going, start to add to it, and then, maybe if we get a subdued year next year or whatever, I mean, you're just able to just sit there and buy good companies. I mean, like at the end of the day, the good companies will figure it out, and so you have to figure out a way to be able to just invest more in those when the opportunity comes around.
Agreed.
So I don't know. I mean, we'll see how the end of the year goes. I think that options expiration for the year is like this Friday. So that's kind of a big thing when that overhang goes through. So then normally we start like what they call the Santa Claus rally. We'll see. I always think December's a weird month because I try not to look into it too much because like some of the best names in the market have come down, but maybe they've come down because somebody's tax harvesting. Maybe somebody's taken a gain, maybe somebody's taken a gain and they're basically, washing it with something that didn't do well and they're trying to basically take their investment losses for the year. So there's always kind of a lot of interesting things that can happen in the month of December.
Yeah, that's a good call out. The triple witching day. Yeah, that's in 2 days.
Yeah, right. Yeah.
Yeah. So
does it say what triple witching is?
Yeah, so it is the simultaneous expiration of stock options, stock index options, stock index futures, all at the same time.
And it only happens a couple times a year. Four times a year.
March,
where you have
June, September,
where you have all of them on the same day.
Yeah.
So that definitely provides a little bit of an overhang, but I don't know. It's been a good year. I mean, I think we've had some opportunities. I always think there's going to be like one or two, maybe three things within a year that you could never predict. Like, could you predicted Liberation Day this year? Like,
yeah, April 2nd.
The tariff stuff, and then the rebound from that. I mean, there's just always going to be things that happen, and so you just got to like not let that dictate your your response.
Yep,
so,
I agree.
All right, man. Well, you got anything else?
I think that's good. We covered a lot. I think we hit some stuff, not so good stuff on the market, some good stuff on the market. I'm cautiously optimistic for next year. So
cautiously optimistic. Yeah, I think that. I mean, I always look. There's going to be an opportunity somewhere.
Agreed. Oh,
we just got to try to find it. So, but as always, don't mistake activity for achievement, and we'll see you next time. Thanks, everybody. This podcast contains general information that may not be suitable for everyone. The information contained here should not be construed as personalized investment advice. There is no guarantee that the views and opinions expressed in this podcast will come to pass. Investing in the stock market involves gains and losses and may not be suitable for all investors. Information presented here is subject to change without notice and should not be considered as a solicitation to buy or sell any security. Right Our Equities does not offer legal or tax advice. Please consult the appropriate professional regarding your individual circumstance. Past performance is no guarantee of future results.